Good morning, or actually, well, it's still good morning. I'm Manju Ganeriwala, and with Trustee Lara Abrash, I serve as co-chair of the FAF Standard Setting Process Oversight Committee. I would like to welcome our stakeholders joining into today's meeting. Before we move to our meeting agenda, I want to remind everyone of our due process correspondence procedure and form, both of which can be found on our website. As previously mentioned, these measures are meant to make it easier for stakeholders to raise any potential concerns about compliance with the due process procedures of the FASB and GASB. Also, I want to direct our listeners to the agenda and meeting materials for this session. You can find these on the FAF website under the Meeting and Events Calendar subsection. Now, moving on to today's meeting agenda, the committee will cover the following items: GASB Report, FASB Report, FASB Liaison to the PCC Report, PCC Meeting Observations Report, and other Meeting Observations Report. Let's begin with our first topic, and I will turn it over to GASB Chair Joel Black.
Thanks, Manju, and good morning, everybody. Always appreciate the Oversight Committee's time and allowing us to update you on the activities we're performing. And so my report will be similar to as it has been in the past, where I'll update you on the technical and research activities of the board, trying to highlight for you due process points at which time we hit and give you results of some of that throughout the process that we've experienced throughout the process. So the highlights for the quarter, for the fourth quarter for us, are on master page 54. We did issue, the board voted and approved, and we have issued Statement 105 on subsequent events. Our infrastructure asset project is nearing another due process document, and our external taxonomy consultative group met with the board in addition to their continued meetings with our taxonomy project as that technology project moves forward. We'll cover each of those three in a little bit more detail on subsequent slides. The fourth item there on the highlights, though, is this is the only place it is, so I'll mention it in a little more detail. And that's we're really excited about, kind of as part of the educational part of our mission, a series of educational videos we are producing or have produced at this point with elected officials in mind, keeping in mind that at the GASB, we think about users in really three main categories. One being investors, participants in the municipal bond community. The second being citizens or the citizenry, taxpayers. The third being elected officials, because legislative officials like state legislators, city council members, county commissioners often don't have access to financial information the way the executive or administrative branch of government might have. And so we have, for many years, and they still exist on our website, user guides for kind of each of those categories of user, in particular the elected officials and maybe a municipal bond analyst. They're 200-page PDF documents. In this day and age, very few elected officials, if any, are probably going to read a 200-page PDF document in order to better understand the 200-page annual report that they receive. And so we tried to modernize those, and these educational videos are our way to modernize them. It's a series of 16 videos, if you watched all of them, each around 10 minutes in length, and they're really geared towards elected officials, although certainly citizens, taxpayers, any kind of person that's really not, extremely sophisticated with government, accounting, and finance should be able to understand. We've developed them in layman's terms, so to speak, and they're not even a talking head type video, but rather it's a whiteboard where we bring up an example of a financial report, and the educator, in this case Tammy Waymeyer, our senior research manager, kind of draws on the board and highlights the things she's talking about. And the point is to walk through all parts of a financial report, a government financial report, and describe for an elected official in layman's terms, what's this part of the report trying to do, and how might you as an elected official use this part of the report. And if you watch all 16 videos, you would end up walking through the whole financial report, or you can target and look at just specific videos that highlight a specific section of the financial report that you as an elected official might want to know more about. I would expect those to roll out in the next 2 weeks. They are really completed. We're getting the website prepared to have a place to put them, and we're finalizing our kind of marketing campaign, so to speak, to really drive these out into our community. Certainly our stakeholder partners like the National Association of Counties, the National League of Cities, GFOA have all kind of agreed, NASAC have all agreed to promote the videos because they believe they're really excited about them too, and believe these will be really helpful to their members. So moving on and walking through then our technical plan on master page 56, you can see our summary. No real significant changes. We have the one removal, which was a final document being issued for Statement 105, as I mentioned earlier. Otherwise, no changes to the technical plan at this point in time. We remain focused and listening to our stakeholders and working on the things that we think they want us to work, or we know they've told us they want us to work on, and that we believe are significant potential improvements to the financial report. So we're being conscious of our preparer stakeholders who are strained for resources, but we're also listening to the users and providing them with information that they want or need, and the financial report is the right place for that. I do like to say that that a significant improvement isn't always just an addition to the report. A significant improvement could be a reduction in complexity or a reduction in the requirements. And we do have some research activities or potential standard setting projects that we're contemplating that could fall into that bucket of a type of improvement, which would be a reduction in those requirements. So we're looking forward to our advisory council. The GASAC annually prioritizes a list of projects to tell us kind of the things that are most significant to them broadly that we should be working on. That should happen in March. So we're looking forward to that and being sure we're responding and working on the things that they want us to work on, or as we contemplate adding anything to the technical agenda, that we're doing it based on what they're telling us are the most important things for us to deal with in standard setting. Moving on to master page 57, talk first about our larger projects, of which we only have one at this point. That's our revenue and expense recognition project. This project has been a long-term project for us. It covers a wide swath of transactions. I don't want to say every revenue and expense transactions, but the majority of them will be affected by this. It covers how you categorize transactions between things that you currently might think of as exchange, things you currently might think of as non-exchange, like taxes and grants, as well as the related expenses that could come about by those transactions. And so it covers a lot of things. We've gone through 2 rounds of due process already. We're driving towards an exposure draft, which would be usually the final part of our due process. And we're working really hard to get through all the issues, hear all the feedback that we've heard, and really try to make something that is going to require a lot of effort on behalf of our stakeholders to implement, to really make sure that we minimize the costs as much as we can by including, I don't want to say shortcuts or practical expedients, but short ways to get at how to account for very basic transactions, but also layer in the complexity that the accounting standards will necessitate to address more complicated transactions. And so we're doing all of that. We're building a lot of examples and illustrations to help people understand all the different aspects and all the things that could be covered by the standard. And so that's what we're at this point working on, the final deliberations on the issues related to exchange transactions and performance obligation model, which we are including. And then we'll be working on drafting the actual documents, including all these illustrations, examples, and ways to help our stakeholders understand the proposal and ultimately be able to implement it. We have, which is new for us because this project and the potential standard is so big, the board is contemplating, and the technical plan currently would call for the exposure draft to actually be broken into 2 parts. The first half would cover categorization. How do you categorize transactions into the 2 broad buckets, category A and B, which is currently exchange versus non-exchange? And then the first half would also cover those things you would currently think of as non-exchange transactions, taxes and grants, all the recognition and measurement criteria related to those. The second half of the exposure draft would deal with those transactions that are category A, that's where the performance obligation model, which is new for us, would be included in all the illustrations, recognition, and measurement principles related to it. So the current time frame is the first half of the exposure draft would come out in March of 2027. The second half of the exposure draft would come out in early 2028. We are informally talking to a number of our stakeholders about this approach and whether they would rather just us wait until we get one big exposure draft and consider that, or whether they like the idea of two separate exposure drafts. We've heard in the past, and I think at least a majority of the board believes, that there's so much here to digest that we're going to get better information and feedback if we separate it and allow stakeholders time to deal with each of the sets of guidance as opposed to one big set. We think we'll get better feedback that way, but certainly if we hear differently from our stakeholders, they'd rather see it all as one, then the board can contemplate that as we move forward towards an exposure draft. Moving on to the next page, master page 58, what we consider our major projects. We have two, the infrastructure asset project and our going concern project. The infrastructure asset project, having already gone through one round of due process preliminary views, we've redeliberated all the topics, made all the decisions. We've ended that at the end of the fourth quarter. Now, early in the first quarter, we've been working through the draft of the exposure draft. Actually, at our next meeting in March, the board is scheduled to vote on we'll have a final ballot to potentially then, if they approve it, release it as an exposure draft for our stakeholders to get feedback on a proposed standard. The going concern uncertainty severe financial stress project has also been through one round of due process preliminary views. We heard a lot of feedback in particular from the audit community about the interaction of the auditing standards with the proposal, given that we took the term going concern away. We separated it into it's two components that we viewed them as: probable dissolution, continued existence, and then severe financial stress, ability to pay your obligations. So we've really taken a lot of time to listen to the auditor's feedback from the comment letters. We've had numerous meetings with the AICPA, including portions of the Auditing Standards Board, the Technical Issues Committee, the State and Local Government Expert Panel. We've had a lot of meetings with them. We are interacting with them routinely on kind of board papers and what the teams are recommending so that the board itself has feedback on the AICPA or the audit community's thoughts about decisions as we then move them forward towards an exposure draft. We extended the time frame of this project out by a year. It was scheduled to be exposure draft in I guess the first half of this year, final standard mid-2027. We extended it out by about a year, really to add that interaction with the AICPA and the Auditing Standards Board. If we don't end up needing that time as we move through it, we might move the time frame back up, but we wanted to build in an appropriate amount of time to be sure we get the exposure draft kind of right and we at least understand their feedback really well, and that adds some timeline into the project. With that, I guess I'll pause because I'm about to turn it over to Alan to walk on through our practice issues and the rest of the presentation. But if anybody has any questions on anything I've covered, be happy to address them now. We can just move to Alan.
Yeah, thank you.
Thank you, Joel. I'll walk you through the practice issue projects, then take you through the rest of the slides for GASB. The first one Joel mentioned, we issued our subsequent events project in December of 2025. And that project really was just trying to clarify what a subsequent event is. Pre-agenda research showed that that we had a sample of governments that you would have thought had a subsequent event, and they didn't disclose it. And that bothered us, and that said maybe the words needed to be clarified. And really that was the purpose of the project, is just to clarify what the definition of a subsequent event is. And so that was issued in December of 2025. The other item on the agenda is an implementation guide update. And just for folks that are on the call and might not know, an implementation guide update for us is really when we issue questions and answers to standards that we issue. Now, our questions and answers, when you issue them in an update, they're authoritative, they're GAP. But it's a way for us to say we've issued a new statement like Statement 103. We've realized that maybe the words, while we like to think the words are perfect when we issue a statement, maybe the words weren't perfect. And we need to clarify some of the topics, some of the words in a standard. We're trying to do this in the next implementation update, but we're doing it just relative to one topic. And we're doing it right at the Statement 103 and subsidies. One of the things 103 did was it defined operating revenue expenses versus non-operating revenue expenses. And one of the things that makes something non-operating is when you get a subsidy. You know, when a K-12 school gets a subsidy from the state government. Subsidy is a new concept, a new word. We defined it, but we're trying to put some questions and answers out there that might further refine and help folks understand what that definition actually means. We're going to put that out. That actually got approved, got cleared by the board in February. I do say cleared rather than approved because that's a staff document that the board clears rather than a board document the board approves. It is a distinction, but with that said, it doesn't make it any less authoritative. It was cleared by the board, the exposure draft. It will be out till April. We will get comments and feedback from that just like we get any other due process document we do. We'll take those, we'll redeliberate those, and hopefully get those answers back over the summer and issue that as an implementation update, probably in the third quarter of 2026. The next slide is really related to Statement 105 and subsequent events, and it's really just an overview of our due process. And even probably more specifically than that, it's really just an overview of the interactions we had with our stakeholder groups. So we'll walk you through the 13 group interactions we had with our stakeholder groups. It'll walk you through the liaison meetings we had with the AICPA. It'll walk you through all the 343 different unique interactions we had with stakeholders over the course of Statement 105, you know, including 25 comment letters, including 318 survey responses. And it's just trying to give you a sense of how many group interactions do we have, and also inside of that, how many different stakeholder interactions we had. It probably isn't to me as much about is 25 a good number or a big number, or is 318 the right number? It's about the fact that we made a concerned effort and a deliberate effort to get as much feedback as we could while we're getting taken care of a project. And this res just to give you a visual of how that all fit together. If we move on to our technology project, and we only have one technology project, and really it's our volunteer digital financial reporting project, which some of us will call our taxonomy project. Joel mentioned earlier that the taxonomy consultative group met with the board in December. It's the first time they had met with the board since then, and they'll meet with the board periodically as we go through this project, continue the progress on the taxonomy. But they met with them, and I think that was a great meeting. It was a full board meeting, and there's a video of that on the website if you want to see it. The board continues to get feedback periodically from the taxonomy group. They're mapping the structure of the taxonomy, line item approaches. They've done some line item approaches already. We continue to work through that and continue to actually make really good progress on that project. We're actually going to do a due process document related to this project in probably the summer of this year. Now, interestingly, if you think about a taxonomy, it's not a standard. This doesn't affect GAAP per se, and it never will. But yet we also think it's important to make sure that users understand, stakeholders understand what we're doing, why we're doing it, and where we're going with this project, even if the word voluntary is the very first word you see on the project, because it is voluntary. But we do think it's important for them to get the feedback. And so over the summer, we will issue what we call a discussion memorandum, slightly different than an ITC you sometimes hear, and so an invitation to comment. That discussion memorandum will be issued by the staff, and it lays out essentially, here's fundamentally where we're going. Here's fundamentally some of the decisions the staff has made in building the taxonomy. What are your thoughts? And we'll have a window for that due process document, get feedback. We'll take in the feedback, adjust where we're going based on the feedback. But again, the stakeholder input is really, really important, and the discussion memorandum is one of the ways we'll do that. Moving on to some of our pre-agenda research and some of our research activities. The first one on here is probably the one that I'll spend most time on. We've been doing pre-agenda research on a topic, cybersecurity risk disclosures. Now, here's a perfect example where we have stakeholder groups that will come at something from very different starting points. If you talk to the users will tell you cybersecurity risks are a very big deal and they want to know more. You talk to a government and prepare organization, they'll say, please don't, because we don't want to put a target on our back, right? Anything we disclose could actually make us even more vulnerable to an attack of a cyber attack. So really the point of the pre-agenda research is really look at the academic research, look at disclosures on cybersecurity information that already exist in the environment, continue to talk with stakeholders responsible for cybersecurity, both on the user side and on the preparer and auditor side. And then at the same time, draft a research memo, which we provided to the board in February, that ultimately will turn into what we call a project prospectus, which will be a recommendation from the staff as to whether we should do a project. And I think that's one that the staff is working on right now. I won't predispose where the staff might land, but it's safe to say that those two views are very important to the staff right now in terms of users would love it, but the preparers are very, very worried about putting a target on their back. And this might be a case where we do research and research doesn't always end up in a project. And the staff's working through that right now, and that's where we'll have to figure out where to go. And I don't want to prejudge any of that. But it is important. It's an important topic. We continue to work on the pension OPEB disclosures. We've talked about that before, I believe. We've done initial surveys, and we're going back to a second round of surveys on the users. And this is about how the users are using the pension and note disclosures. One thing we hear very loud and clear is, if you asked them, what takes up the most pages in a state and local government's ACFR? It's your pension OPEB disclosures. And so we're asking ourselves, Joel talked earlier about simplification. We're asking, okay, we've got all these disclosures out there. How are you using them? And does it meet this new idea of essentiality that's in Concept Statement 7? And the final topic I'll talk to here is on gap structure. Most of you probably know, if we're interested about gap structures, we are one of the, I think, the only standard setting bodies that actually has different sets of authoritative literature. When we issue an original pronouncement, it's authoritative. When we issue our Q&As, they're authoritative. When we update our COD, it's authoritative. You compare that to the FASB, where you just have to go to their codification. That's where it's authoritative. So we're really asking the question is, does our structure make sense? Does our gap structure make sense? Should we change it? What are the pros? What are the cons? What are the benefits? What are the negatives? And we're asking that question in basically a research proposal. And the board will look at that and decide, hey, should we move? Should we update our codification? Update the structure of it, just the fundamental structure of it? Or what should we do? It's a research proposal. It doesn't necessarily result in a standard setting project for our stakeholder group, but it may and could result in the ability for folks to get answers to their questions better, to search for answers quicker, to not look at an original pronouncement that's been amended, and they're reading that original pronouncement that's been amended and not realize there's an amendment to it, they're not reading it. So there are things like that we're trying to think through and trying to work through. We will continue to do that, and we're actually going to issue a discussion memorandum for that one as well. And we'll issue that discussion memorandum in March, and again, put it out for comment. Again, not standard setting, but feedback still matters. And we'll put that out for a period of time and get feedback on that project. The last topic I will discuss, and I'll mention to you, is just our PIR activities. Post-implementation review, if the acronym doesn't just roll off your tongue. We've got 3 left. One's on OPEB, one's on fiduciary activities, and one's on leases. We very much enjoyed reading the FASB's Leases PIR project they released here recently. I think it was a very, very good read. And there's lessons to learn for us as we're doing our PIR report as well. But we're continuing to work on those. The next one we will issue will be the OPEB PIR. We'll issue that closer to the end of 2026. But these, again, continue to be very critical for us and the staff, and we'll continue to make progress on them. With that said, I can stop for questions if anybody has any questions.
Thank you, Alan. I don't see any hands raised, so appreciate it. Thank you, both Joel and Alan.
Manju, you got.
Oh, Paul has a question. Sorry, Paul. Go ahead. Paul, you're on mute.
Sorry about that. Hey, Alan. So obviously some very thorough reviews going on here. Can you talk a little bit about more how you use the feedback you get in the PIR work and any examples of how that shaped your thinking?
Well, actually, it's a great example, and it's one of the ones that we're dealing with right now. You're trying to understand, not only do we meet the objectives, you're trying to also understand cost benefit. And you're trying to reach out, for example, if we hear folks anecdotally tell us that the leases standard took a lot of cost and effort to implement. So we're trying to say, okay, we've heard that. So let's reach out to our stakeholder groups, GFOA being one of them, and let's say, let's do a deep dive on that. Exactly. If you said it was costly, what were the costs and why were the costs and why did the costs exist? So we understand, is it just because you didn't have the leases in a central location, or it's because the leases were not standardized, or it's because we made the criteria harder than it needed to be, or whatever it might be, but you've got to react to the fact that just because you're here, we might pivot a little bit and do a deeper dive into what information we might want to gather, because ultimately we want to answer those 3 questions. Do we meet the objective? And did we meet the cost benefit decision? And if we didn't, can we learn from it? And so I think it's very important when you hear noise, when you hear information like that in the environment that maybe was costly, we need to understand why when we get through the report.
Thank you.
Paul, I might add to what Alan just said as an addition. One of the things we heard even up to now on the leases standard was cost related. And when we dug into some of that cost, what we saw were a lot of governments implementing the standard on immaterial leases, and they were spending a lot of effort when even in the aggregate, they might have 100 leases that they've now put into software, purchase software for, have disclosures about. When you add up all 100 leases and that liability, it didn't appear to us to even be material. And so what that led to is us talking to GFOA and saying, we're listening to the costs too. We're going to think about our process. Everything Alan just said is true, but also, hey, GFOA, maybe you could encourage and help governments preparers use materiality a little better. That's not specific only to leases. That's kind of more broadly. And GFOA has taken that up. They've seen in their research that a lot of governments don't use materiality, and maybe that's a way for them to improve the efficiency of their financial reporting. So I think that's a little bit of a product, maybe a side product in a way of the lease PIR and how we use that information and act on it.
Yeah, thank you. Good examples.
Thank you, Paul, and thank you, Joel and Alan. Moving on to our next agenda item, FASB report. So I'm going to turn it over to FASB Chair, Rich Jones. Take it away, Rich.
Great. Good morning, everyone, and thanks for the opportunity to present to you this morning. Today, Jackson Day and I are going to cover updates to the fourth quarter progress on our technical agenda. We'll also give you updates on our agenda consultation process, as well as our PIR activities. But maybe before I start, this will be our last report on 2025. So I'd like to take a little look back at 2025. It was certainly a busy and productive year here at the FASB. We issued 11 final standards. We had deliberations on key input on 2 invitations to comment, one related to accounting for intangibles, one related to financial KPIs. We launched our 2025 agenda consultation, which I'll give you an update on later in this session. And we also completed the post-implementation review of leases. When you look at that, it's a tremendous amount of activity. It's really only possible because of the great participation from all of our stakeholders. People invested a lot of time and effort in helping us to make that progress. And it also couldn't happen without the work of our staff. Our staff was very busy in this past year. And you're seeing the fruits of that labor. So with that, let me turn it over to Jack, and he's going to kick off the update on the fourth quarter of 2025 technical agenda. Jackson?
Great, thank you. So if you turn to master slide 67, we're going to go through each of the documents that were issued in the fourth quarter. I'm going to give you a little bit of feedback on them. First of all is the financial instrument credit losses. Speaking of feedback, this came from our feedback loop, our PIR process, one of the steps of which is to monitor the implementation of the standard. We heard back from stakeholders. The board heard back from stakeholders that there was a double counting of CECL reserves going on. Those are the reserves for the loans. And that was because of an overlap in the guidance between business combinations and CECL. So the board undertook a project. Preparers were finding it difficult to explain their results because of this situation, and users were finding it hard to understand. Board undertook a project and modified the guidance and addressed this issue. The interesting thing about this is if you look at the bottom of the page, you'll see that the users were the most proactive in responding to us, understating the importance of that change. All right, so we'll go on to the next slide on hedge accounting improvements. This source is a maintenance. We have a responsibility to maintain the codification, and there were 5 distinct issues that were small, that didn't really change the outcome from a user standpoint. Actually, maybe even made it a little bit more clear to reflect the economics of hedge accounting, and the board went forward with this project with a lot of accolade. So we'll go on to the next one, government grants. This is an interesting one. This is 53 years in the making. Government grants, there was not a standard. It's a gap in gap. And what the board ended up doing was circulating originally for input whether or not it might make sense to look to IS 20 as a starting point, which is the international counterpoint. Ultimately, that's what the board decided what to do. And that does a few things. First of all, it creates some international alignment in this important area. Second of all, it reduced diversity. It didn't completely eliminate diversity because, in fact, there are certain options in there to allow, management to kind of tell their story and also what the transaction about and the different types of government grants, because, the different possibilities is numerous. But it did do a few things. First of all, it eliminated those companies that were analogizing to the liability guidance, contingent liability guidance. It eliminated those entities, business entities that were analogizing to not-for-profit guidance. And it also made clear that those that were analogizing maybe were analogizing to certain aspects. It took a framework and said, here are the choices, here are the requirements, and here are the disclosures. So it's slightly different than international, requires a slight bit more disclosure, but it's based on IS 20. So then if we go on to interim reporting, this is another maintenance document brought on, by a number of things. But over the years, there have been various decisions made about interim reporting, and it was becoming difficult to understand what was required for interim, what wasn't. That's all been clarified. It was not intended to reduce any disclosures, but just to clarify that what was required and not, and also to clarify what the principle is, that it's an update principle from year end. Codification improvements is the next page. Now this is an interesting one. This is a evergreen project. So again, part of our feedback, the board and the staff collect various inputs from a whole wide variety of stakeholders. And some of the items that they point out is there could be a couple words to be clarified here or there seems to be a conflict here or there. And, those need to be corrected. All right, so that's got to go through the due process. So these things are less significant. We collect them and periodically make a list of them, suggest minor changes, and the board takes a look at them. They go out for due process. We get comment back, and all these get made. And I think the last time there was 33 or 34 in there. We're about to kick off another project like this next month that I think has about 8. So just to kind of give you a sense, like, for example, in the last version, there was an old standard that got codified, brought forward. There was one criterion that got left out. It continued to be used because it was aligned with the principle, and it was in some of the documentation by some of the big firms. But the question came in, hey, can you put this back into codification? Instead of just relying on the big firms, we thought that was a great idea to make sure everybody was all on the same page. And that's a type of example there. All right. So if we move on to the next page, this is some other items that are significant from the fourth quarter. These are 3 items where redeliberations have been completed, and the board expects to issue final ASUs. The first couple are in final stages of the process. One of them is accounting for debt exchanges. And this was a modification of a test to make it a little bit easier to use, and also to make it clear what was going on. There was this complicated test. This came up through our EITF process. The EITF got together, talked about it, passed it on to the board as a recommendation. The board then issued it, exposure draft came back, and just like any other normal board project, it's been voted out, and we are just now wrapping up our fatal flaw review process. Environmental credit programs, I know you've heard about that before. We're just working our way through. That's a comprehensive standard on environmental credits to fix yet another gap for emerging transaction. And the staff is working on a ballot draft right now to send to the board. So we're moving right along on that. And then the next document that's in the system that has been voted out by the board already and going through the process is the EITF on the initial measurement of paid-in-kind dividends on equity classified preferred stock. So there's a lot of big words there. So you might get that this is a real narrow issue out of all those different words. It is a very specific issue, again, raised by the EITF. They made a recommendation to the board, and everybody thought it made sense, and the board issued its exposure draft. Now it's in the final stages. So that is a summary of the activity. I'd be happy to answer any questions or pass it on off to Rich.
Okay, thanks, Jack. I know you covered that fairly quickly. An awful lot of work went into each of those items. So do want to thank Jack and our teams for all that work. If you move on to slide 73, there's an overview. It's called Other Projects Overview. That effectively gives you an update on the other project agendas that we have. First, the research projects. The research agenda. We removed one item from the research agenda related to digital assets because we actually added items in the first quarter, in the fourth quarter related to accounting for digital assets. And we'll go through those in a slide from here. The Emerging Issues Task Force, the reconstituted Emerging Issues Task Force, has been very busy. As of year end, they had 3 projects on their agenda: accounting for mortgage servicing rights, market-based cash balance plans, and application of normal purchase and normal sale exceptions to electricity contracts. Since year end, the issue related to cash balance pension plans has been added to the board's agenda, and the board voted to move forward with an exposure draft on that project in the beginning of 26. But I think it's what the intention when we reconstitute the EITF is that that entity of very talented people would be used productively to raise issues earlier and propose solutions for the board to consider. And I will say that my own perspective, it's been a great success for the organization. Post-implementation reviews, we completed, as I mentioned earlier, the post-implementation review of leases in 2025. So we have one remaining post-implementation review on our agenda, and I'll give you an update on our progress on that. That's the post-implementation review related to the current expected credit losses standard. If you move on to the next slide, you'll see this is a recurring slide that you will likely see throughout this year related to our progress on the 2025 agenda consultation. As discussed with this committee previously, back in 2025, we completed the outreach with over 200 stakeholders, asking them the simple question, what should be the FASB's priorities and why? We used that to populate an invitation to comment, summarizing what we'd heard from those stakeholders, and issued it in January of last year for all of our stakeholders to have the opportunity to comment on. We got approximately 130 comment letters back by the comment period deadline of June 30th of this past year. And since then, our staff has been working diligently to go through every one of those issues. That's what we refer to commonly as the 72 issues. Our goal, and I will say that it's an aggressive goal, is to bring all of those issues back in front of our board by September of this year, so the end of the summer of this year. So that's what we're working on. I'll keep you updated on our progress, but our stakeholders took a lot of time and effort to give us great quality feedback, and this is our fulfilling our end of the bargain related to that feedback and as we set our agenda. If you move on to the next slide, this gives you an update on our progress on considering that agenda consultation feedback as a board. If you look through this slide, any item that's identified in green is an item that's already been added to our agenda. In addition, the accounting for commodities, which is blue on that slide, has also been added to our agenda after the preparation of these slides. So that's 5 projects already added to our agenda. There's 4 projects that, while we got great input from stakeholders, our board weighed them and decided under our agenda criteria not to add them to our agenda. So we've completed our discussion of those items. We're not adding those to our agenda. You can see those items that are all marked in yellow. And then finally, if you look in gray, those are items that came in front of our board where our board effectively said, hey, we'd like some more information on those. Our staff's going back. In many cases, when you looked at an item like, let's see, which would be a good example, Goodwill. Yeah, Goodwill. It probably touched on potentially 5 different projects. Our board probably wasn't as interested in several of them, but there was a couple that we were. And we sent the staff back to gather additional information on those items. If you move to the final slide in our deck, it talks about the PIR activities. We've discussed in depth back in November with this committee and the trustees in general, our completed post-implementation review related to leases. We are carrying out that same process related to the current expected credit loss standard, and we do expect that to be wrapped up later this year. What are some of the activities that we have to look forward to? Continued outreach with our stakeholders, outreach with banking regulators to understand their perspectives on it, given that they use GAAP as a starting point for fulfilling their regulatory activities. A roundtable where we bring in participants from all different backgrounds to get additional input. So we're looking forward to that and looking forward to updating the committee as we progress throughout the year on that post-implementation review. And with that, that would complete Jack and my presentation for today. Happy to take any questions about anything that we've covered or anything on your minds.
Anyone have questions, comments? No? There's a lot here. Thank you, Rich and Jackson, for your presentations. Okay, moving on to our next agenda item. It's the FASB Liaison to the PCC report from Sue Cosper. Sue?
Good morning, and thank you, Manju. Our last PCC meeting was held on December 11th and 12th. The liaison report is in your materials beginning on page 77. And there's an agenda and also a meeting recap included in your materials on page 82. The PCC had a very productive meeting in December. There was high-level engagement among the members as well as with the FASB. We also welcomed Wim Schaefers. He's our newest Prepare PCC member. He was able to join us in person, and his term began on January 1st. A few highlights from the meeting. The PCC discussed the research associated with further refining their agenda priorities, which would include updates from some of the committees that they've established on those topics. And particularly of focus was the accounting for debt modifications and extinguishments, the accounting for leases, and the accounting for subjective acceleration clauses. The FASB staff also provided an update on recent activities on a variety of other projects, including the targeted improvements to the equity method of accounting, transfers of crypto assets, and the classification of certain digital assets as cash equivalents. There was also a discussion on the FASB's work on the PIR on the current expected credit losses model. Turning to town halls, liaison meetings, and other activities, since we last met in November, the PCC has hosted 3 liaison meetings. In January with the Institute of Management Accountants Small Business Shared Interest Group, which is a Prepare practitioner group. In February with the Construction Financial Management Association, which is primarily practitioners. And then also in February with the National Association of Surety Bond Producers and Surety and Fidelity Association of America. And that is 2 separate user groups, primarily focused in the construction industry. These meetings primarily focused on the PCC's current agenda priorities and other topics that they had of interest to share with the PCC. The next PCC meeting will be held virtually on March 3rd. And with that, I'll just pause here for any questions.
Any questions, comments for Sue? Thank you, Sue. All right. So moving on to our next agenda item, which is the other meeting observations reports from trustees who observed meetings. And at this point, I am going to turn to Beth. Beth observed, Trustee Beth Pierce observed PCC meeting from December 11th and December 12th.
Thank
Beth?
you very much, Manju.
Mhm.
I did have an opportunity to observe the meetings, and I won't repeat all the subject matter that Sue went through, but there were two great educational sessions on the equity method of accounting and digital assets. I think what impressed me the most was the ongoing town hall and liaison meeting process. I listened to the updates, and it was clear that outreach is a critical component of their work plan. PCC members are committed to this process and engagement is happening, and they continue to expand that process. The project prioritization process and the subsequent review of specific projects also incorporates stakeholder input. The chair engages the PCC members, and the relationship between the staff, the FASB staff, the FASB and the PCC, a very respectful, coordinated, and positive impact. And I was again very impressed with the meeting, and want to thank the folks at the meeting for the opportunity to listen in and continue the good work.
Any questions for Beth? No? Okay, so thank you, Beth, for that report about the PCC meeting. Our next and final item is a report on any other meeting observations from the trustees in the last quarter. And Trustee Beth Pierce observed several meetings in the last quarter, including the GASAC meeting in October, GASB meeting in October and December, and the IAC meeting in November. Beth, thank you for taking so much time and observing all these meetings. Could you please share your meeting observations with us?
Thank you very much. I'll start with the IAC meeting, and again, that meeting was held on the 20th of November, and 9 members were in attendance. Again, robust conversation. FASB members were there, FASB staff, all the members of FASB were there. One of the standing agenda items is emerging issues and trends. And again, I see that as a great opportunity for input. There were a number of subjects. I won't, for the interest in time, go through those. But again, it was something that brings in kind of an eclectic process to bring in ideas for FASB to consider. The FASB update was excellent. The discussions on 2 subjects, the equity method of accounting and the consolidation of business entities, again, was robust and provided input to the FASB on both subjects. For me, bottom line is there's an effective dialogue between the IAC and FASB. Moving on to, I'm going to, in the interest of time, kind of combine the GASAC and GASB meetings, and it also raises a point about how in sync those meetings are. So I observed the GASAC meetings on October 20th and 21, and immediately following that, the GASAC meetings on the 20th and 21st, and then the GASB meetings on the 21st and the 22nd. I also observed the 12/9 GASB meeting with the taxonomy consultative group. I usually don't talk about the specific agenda items, but there's a point to this, so bear with me. The GASAC agenda included revenue and expense recognition, infrastructure, assets, subsequent events, and going concerns. The GASB agenda included subsequent events, implementation guidance update, going concern, revenue and expense recognition, voluntary financial reporting and infrastructure assets. There's a link between the two, and it's very clear that, that Gas Act stakeholder input has an important impact on GASB. I kind of kept a clock running, and it only took 8 minutes into the GASB meeting for the GASB to make a change in their pre-ballot draft for a proposed financial statement based on the Gas Act input that they received in the previous meeting. Going back to GASAC, one of my favorite parts, I used to be a member of GASAC, so I have a little bit of bias on this one, is the agenda item where they have emerging practice issues. And this is kind of a free form, open forum to bring issues to the attention of GASB. And again, there was a very robust conversation on those. Going back to GASB again, trying to link these two up, you see that their information that they receive from this really impacts the technical agenda and moving forward. Sometime back, the Gas Act brought up infrastructure and the prioritization process, and as you can see, it's a part of both agendas. There were lengthy discussion on a number of views with related in the GASB meeting to infrastructure. It was a long discussion. It was a difficult discussion. There's a lot of different views about infrastructure, and I want to commend Joel and the GASB for a very respectful process and a process that moved forward and also gave the opportunity for those varying perspectives. I'm going to move on to the GASB meeting with the taxonomy consultant group, and that occurred in December. It was 19 members of the consultant group was there, and GASB staff and GASB members, and it provided feedback on one of the most important projects that is in terms of time and in terms of interest at the local level, which is the voluntary project for the GASB GAP taxonomy, which you heard a great deal from Joel and Alan today. This is, as I said, an important project. They received feedback on that. It was generally positive. Multiple entities exist under the GASB umbrella, so it's a challenging project in terms of being able to address the needs of those very different entities. The 19 members brought up a number of issues that they wanted to address in the project, including, again, the diversity of entities, mapping, the education came up all the way through this, and it's I think it's something that's consistent with GASB's recent efforts to reach out to its stakeholders. Again, I think it was a very productive meeting, and work on this subject will continue. And I think that GASB took to heart the comments from the consultative group, and that concludes my presentation.
Thank you. That was a lot, but thank you again for attending so many meetings, Beth. And I would just observe that you mentioned that you were a member of GASAC, and you're too modest to also say that you were chair of GASAC also. So thank you again, Beth. We also had Trustee Marion G. Observe the FASB meeting on January 28th. Marion, if you can share your observations with us. And oh, there you are on my screen. The squares keep changing on the screen. Go ahead, Marion.
Sure, thank you. As you mentioned, I did observe the January 28th FASB meeting, during which topics involving consolidations for business entities, the definition of common control, asset retirement obligations, and environmental obligations were presented by FASB staff and discussed by the board. There were over 130 comment letter respondents and outreach discussions with stakeholders regarding these topics that were received in response to the 2025 invitation to comment relating to the agenda consultation. During the meeting, it was apparent to me that the board really embraced the feedback that it received from stakeholders and appropriately considered it as part of its deliberations. Several FASB members and stakeholders mentioned that the guidance related to consolidations was a bit difficult to utilize. As a result of that, the board requested that staff conduct additional research that will involve pursuing potential improvements to the disclosures and the guidance. The board's decision to not add a project to its technical agenda relating to asset retirement obligations was in alignment with the feedback that they received from stakeholders as well. There was not a lot of broad support relating to a change in reporting requirements relating to this matter. And so the board ultimately decided not to pursue a project pertaining to asset retirement obligations. I do want to commend the FASB staff and the board for their preparation prior to the meeting, which basically was evident during the discussions that took place. I know it sometimes is difficult for the staff in that they put a lot of time and effort into providing the materials to the board, and sometimes that does not result in a project. It does not mean that we are not successful. It just means that appropriate consideration was given in relation to the feedback that we received from stakeholders and also the board's review of the documentation, and ultimately sometimes that does not result in a project. All of the board members were actively engaged during the meeting. I thought that Chairman Rich Jones did a good job of providing an opportunity for those members to provide input pertaining to the topics that were on the agenda. So that concludes my report.
Any questions for Marian? No? Thank you, Marian. Okay, and with that, we have now reached the end of our public session of the FAFS Standard Setting Process Oversight Committee meeting. Again, many thanks to those of you who tuned into today's webcast. Please note that the next Oversight Committee public meeting will be held in Washington, D.C. on Tuesday, May 19th. Again, thank you and have a great day.